By 2030, the Metaverse market is expected to grow significantly and draw in billions of users as 5G networks, Metaverse hardware, crypto markets, and software are prepared for use. Additionally, major corporations like Microsoft, Google, Facebook, Nvidia, Roblox, and others are becoming interested in this market. And we can clearly see this with the amount of money pooled in. A report on the Metaverse was recently released by Grayscale, which is one of the biggest cryptocurrency asset managers in the world. We're going to see what the Metaverse report says in today's video, and where all the money is going. Now, who is Grayscale and why is their Metaverse report gaining traction across the whole world? Well, for now, all you need to know is that the company is the largest cryptocurrency asset manager in the world. The Grayscale Bitcoin Trust, which is the world's largest trust, holds over 650,000 bitcoins worth more than $37 billion. Now, Grayscale has been interested in the Metaverse ever since it invested in the crypto gaming platform Decentraland in 2017. Why do you think it has invested there? Well, because it's forecasted that virtual reality will be the next big thing for social media. They also released a Metaverse report which gave us an insight into how big this project will be and the future of technology. The report was titled The Metaverse Web 3.0 Virtual Cloud Economy. It started off by explaining what the Metaverse is before getting on to putting Decentraland in the spotlight. In the report, they call the crypto gaming platform one of the leading blockchain-based virtual worlds, before finally shifting to explaining how Facebook's rebranding in 2021 had a catalytic effect on other technology companies. We're only going to be looking at the important parts of this report. If you're interested in learning more details, you can always look it up. Now, the first part of the report covers the meta thesis. It explains how Metaverse and Web 3.0 would be used in technologies and cryptocurrency. The second section examines the potential of the Metaverse market and specific projects within it. This report highlights in detail the average amount of time that a person spends using technology. It also shows a prediction that the revenue earned from crypto gaming would double from $180 billion in 2020 to $400 billion in 2025. This means that the average person will be using a crypto gaming platform at least once in their life by 2025. And if we look at the cryptocurrency market, with each passing year, new reforms are taking shape, putting the market at the core of the Metaverse. This section is then concluded by finally highlighting that the gaming sector, amongst other markets in the Metaverse, would be estimated to make $1 trillion in revenue. Let's not forget to point out that the Metaverse was estimated to grow to a $30 billion market. Crypto markets would reach $1 trillion. Facebook is already set to pull in $2 trillion, and the rest, which is a collective of other tech and software categories, reports a whopping $15 trillion investment. If you calculate this in crypto, which will likely grow as the intermediary for transactions in the Metaverse and Web 3.0, cryptocurrencies could see a growth of 30 to 500 times in the coming years. The Web 3.0 would also pull in about $200 million for sales such as virtual land and services. The report also has a section for the NFT sector, which is rapidly gaining attention even from amateur artists. This section stated that during Q3 of 2021, total crypto fundraising totaled $8.2 billion. Within the Web 3.0 and NFT sector, blockchain-based gaming attracted approximately $1 billion in funding across 14 deals, ranking it as the top subsector within the category. The Metaverse has grown considerably since 2020. Today, there are about 44 million users. To summarize everything, Grayscale's Metaverse report was a subtle way of putting Decentraland on a pedestal. And finally, this report ends with the risks involved. The first risk is, of course, competition. The second risk is decentralization, and that's because there may be concerns around the pace of innovation, with decision-making distributed among a wider group. The third risk is network economics, which has a lot to do with projects in the Metaverse, where players can play to earn money. The fourth risk is volatility. The fifth risk is token concentration, which is somewhat ironic given decentralized voting dynamics. The sixth risk is about regulation. Though there is no mention of regulation of crypto gaming coins like Mana and more, it's quite concerning as this may pose a risk to users ahead. The only regulatory risk discussed relates to crypto securities such as SEC. However, this platform only recognizes Bitcoin and Ethereum to date. Hopefully, things will change in the coming future. Share your thoughts about this report in the comments section below. And like, share, and subscribe to show support for the channel.